Sue's back for another one. Now, what I want to do in this video, you'll see these frequently on this channel. Often every day we'll have these market reviews. Okay. Now, really quick, we talk about time and price, okay? And the biggest thing that I want to do with these market reviews is when I'm breaking down the marketplace, whether it's in hindsight or I'm giving you levels or I'm giving you, what the chart should do in order from left to right, I want you guys to explore price with me the way that I see it through my eyes. And so people always ask the question like, yo, like, do ICT concepts really work? Or like, what is the disconnect with a lot of traders? And again, like I said this before in my previous video, there's a lot of traders with hella experience or maybe even just got started and they see like the 2022 playlist. Seasoned traders understand that model. And the 2022 model is great. I mean, you get a displacement, fair value gap. It's not like a super, super difficult concept coming into like an optimal trade entry, you know? So my thing is though, when you're viewing the marketplace, there's liquidity above and below you, right? But the only thing that is really difficult for a lot of people is, again, they understand the concepts on paper. But when you go into the market and you're navigating price Monday, Tuesday, Wednesday, and Thursday, yes, there's liquidity above the marketplace on this Monday. And we have this like PM session high, we have this London high, right? Asia high, all these things. But the only thing is, just because, let's say on this Tuesday, right, it leaves open these highs. The problem people have is the organization from left to right that gets you there safely from, whatever, A to B. Or even if you woke up during London, right, and this is bullish, you do get a turtle soup to trade down. But the problem is people ask me, hey, is gold bullish? Is it gold bearish? My absolute response, my students understand, I say this every single time. It depends on your objective. So when we come in and we do these market reviews, we review why price did what it did in order, based on time, price, structure, go back levels. But it's not always about go back levels at all. What's not going to help you is trying to figure out like just a high, just a low, and trying to get a buy or sell from either one. You still have to come in and understand that market structure plays the biggest role. And you need to understand how to be a reliable narrator. If the chart is like a book and it's telling you exactly what to do, you need to learn how to narrate. Okay? And this comes from sitting in the marketplace in hindsight, looking at price action, not just studying how you normally do. And I understand that you come in and you review market or you review your trades or what happened that day. And you come to some conclusion on why it went up or down. You say, okay, got it. Cool. But the problem is when you have ideas in the marketplace and you're trying to translate them into your P&L, right? For example, price leaves this high open, leaves this low open. When you're in this area now, right? You have to come in and decide, yo, what is price really doing here? We go up, back down one more time before you get the massive run. This right here is an account killer. Imagine how many people had buys here, got stopped out or got scared and they cut their buy, or they caught it trying to buy too late and now this runs down, now they're scared. Or they think it's actually really bearish. Maybe you get a nice scalp down, no problem. Or maybe you think it's just bearish from the next day or previous day. That's fine. But the problem is people come in, have no idea which one is first. Is it going to take the low first? Is it going to take this high first when you're trading in this area? How far is it going to go up? If it does retrace, how far down can I expect it? Do you have these thoughts? And my thing is, I'm trying to look for why price did what. Now, number one, I always start on the hour chart. And I want to be clear about this on why. Me personally, I love the hour. It's very balanced. Um, it's not like a super high time frame. It's not a super low time frame. So it's very clear. And again, I say this every video. You understand my chart organization by color. So once you see how like these definitive highs and lows pop in, I can see this without having a lot of you know, a lot of trouble. It's visual. It's a London high. Got it. I don't have to really debate about it. I know exactly what panel it's in. Green. London. It's a Monday. Sunday down here gives me a little low. Okay. But the thing is, I'm not going to go start marking every fucking thing. All right. For a reason. Now, we have so far on Monday, as we're printing, right? We have this high of the week on the Monday. Let's zoom in here. So the biggest thing is this high of the week. So far, understand my language. Okay. When we popped in here, I want you to understand. You can break these down. You guys understand the concept. What is London's actual function? Some are going to say manipulation, obviously. And you can see how destructive this can be if you're not careful. But what does it also do outside of that? It gives you the high or low of the day a lot of times. And I've talked on that. As a function, think about not just time and price, but functionality in the marketplace based on certain time of the day. So if you understand that London by itself is responsible for high or low of the day, and if you're not getting that, it's going to be met inside of New York with your high or low of the day. Typically, Asia does not offer you uh, a high or a low for that time period. Asia normally gets what? Attacked. This is PM session high. That gets attacked. All of Asia does not survive. So even if you had sells in here or buys in here, you get taken out both sides. Doesn't matter. That's why we typically say, unless you're understanding what Asia's doing at the moment, don't touch it. Use it. The same way that I often trade Monday. It's an accumulation, same as Asia, right? So now that you guys are starting to be more comfortable with AMD, and this is my thing, right? All these things that I'm talking about, these are not new concepts. It's how I like to trade. It's my opinion. You can agree, disagree, use what I'm doing, or not. But what I do, I love explaining how I view the marketplace. It's fun and it makes sense. And I feel like it's my teaching style that people get attracted to. You can go learn the concepts from anybody else. It's on the internet. But you're here with me, and I appreciate that. But the cool thing is about all of this data in here, and we're only, again, looking at the Monday and the Tuesday so far, right? Let me be clear, really clear. Let's go in order. And that's the most important part. When you open on Sunday, you drive directly down. What happens? You create sell side liquidity and buy side liquidity, right? So in my mind, look what happens first. These 2 points get created, right? As soon as Asia and London starts, we drive up immediately, creating our high of the day, how we just talked about, but also taking some measure of buy side liquidity. I've always said the market only really does like four things: making liquidity, taking liquidity, imbalance, rebalance, imbalance, premium, discount. And it's using math to make your structure via PD array. Ah, so we take this measure of liquidity first to the upside, and we leave this high open, going into a kill zone. London's kill zone is 2 to 5 o'clock in the morning. Now, you notice something that I've been talking, right? London is obviously 3 o'clock in the morning. This right here says 8, and obviously my London open is 9 here. You need to understand this. It's not like super important for what we're talking about, but forex, gold, runs on Euro time, doesn't run on, like, the algorithm itself is not using New York time. It's using the sessions correctly at the right time, yes. Is it technically using New York time to generate prices bullish or bearish? No. No, it's not. You can fight me on that. You can agree or not. We're not going to go into why, but I just want you to know gold does not run on New York time. When you get to my private Discord, when you get to some of my videos that are, just for them, I have a whole there's hours and hours and hours and hours of content on this topic. You can go and watch that. Okay. But long story short, number one, we're going in order. London comes up and takes this buy side liquidity from Sunday, leaving the sell side open, right? Now, high of the day, it is what it is. So when you get into this New York section here, this is still open, all right? And look, when we really look at these, this is equal lows. Cool. But we're talking about market organization. So you want to mark these high and low, obviously London, and this low that was wide open. You have all these smaller ones here from New York and all that, but I want ones that really stand out. Asia low, PM session high, London high, the Sunday high and low. These are ones that are very definitive. Look at the wicks on these, complete reversal. Look at the wicks on that. These stand out, right? Like a sore thumb. I'm not marking every single damn low and high, bro. You're going to overload the chart and get pissed off. I'm telling you that right now. So the biggest thing that I'm talking about is the organization from left to right. How do I know what the real target for liquidity is? How do I know the draw of liquidity? How do I know it's a turtle soup to stop above this high here and not just run up and keep going forever? How do I know that? Again, we're talking about function. Normally, the high of the day, if it's London, pops in between that 2 and that 5. For Stockholm on gold, it's going to be that 9 to 12 if you're looking at Stockholm time. Now, when you see this high taken and this is still left open, every single time it pops up in my mind, this is no way that this is really actually bullish. It might be a little run here inside of New York, only to, take out small buy side liquidity again, makes a lower high close to this one, but makes a lower high, and we drill down again, making our equal low and retracing. And again, what do we get? London high of the day. Same area, same time. You're not confused. And look, we took a measure of buy side liquidity even though we didn't take the Monday high. That's fine. Even if you're looking for it on this run, which I probably would be, you're being open to making yourself available. What do I mean by that? You're making yourself available if price wants to do one thing or the next. If it wants to take this one for your turtle soup, you can trade that. The time is good. It's right inside of London's distribution, and you can take that right down. And distribution meaning 3 to 4 o'clock in the morning, 3 to 4:30. That's that distribution 90-minute cycle that you can pay attention to and trade that. But the whole objective is you're trying to understand whether this is going to be a run on stops to just go up like that, create a wick, and then blast down. And take the sell side liquidity pool and take these equal lows, which is the more abundant spot for liquidity for any seasoned ICT trader. You can see that without go back levels, no problem. But the problem is, how do you know it's not going to run this? Or this is going to only be the liquidity taken and this is going to be left alone? Yes, I'm often looking for a Tuesday to be high low of the week. But again, that Monday high pops in all the time. And we're going to verify it by Tuesday. So when that London has trouble getting back above there, when you get into that London kill zone, it might get close, but the time itself is going to stop, make a high of the day, take some liquidity in a manipulative way. London is manipulation. And look at the price action. Manipulation. It goes up, down. Too far, too fast, both sides. And when you get to New York, let's drill down the time frame. So we're looking at the Tuesday, right? Exactly. I want you to understand. Look at manipulation. Goes up, super, super far, super, super fast, and goes down. We talked about expected price action based on AMD. If the Monday is typically an X or an A, this is your accumulation day. It's annoying, but that doesn't change you from having one good main idea and being able to run that. You could find this high of the day, run cells, no problem. Easy. Ignore all this bullshit. Don't try to buy this shit. If you take that one London move between 2 and 5 in the morning, you start taking profits by 8, securing your money, taking partials. Leave that runner if you want, and you get all of that. But the problem is, it is an accumulation day. It's going to be motherfucking annoying. Up, down, up, down, up, down. Making liquidity for later on both sides. That's all this is for. So when you see something like this, Judas swing. Everybody here wants to be energetic. They feel like they missed something. Now they want to be all, oh, it's Asia session. Market's back open. Let's get it. Nope. Sheep's brought into the marketplace. Walk right into that barn. You've seen that ICT video. Go watch Judas swings again. Price runs down. Gives you a nice move to trick people in to think that it's bullish here. They get smacked. Now, when that starts to run down, they change bias. There's all this fractal flout in the marketplace now. Buyers and sellers are trying to come in and figure out what side is what. Retailers get confused. And again, it's only going to pop down. We talked about equal lows or whatever. So once we have this here, right? Asia, we talked about, never survives. High is made. London goes and attacks these lows, no problem. And no, I'm not saying you only have to trade London. It's not what I said. You can understand that when you get to New York and that your high of the day is printed based on London's function. You're not going to always anticipate for London to be a sweep of something. You can come in and easily find that what? Fair value gap if you want. And you can see that like I'm stoned, so like I'll forget that I have a touchscreen. There we go. Look, you can easily get that New York optimal trade entry right into a PD array, and it takes liquidity just like that. And there's another one right underneath it. So even when it retraces like that and you think that this is going to be a turtle soup, this is still the high of the day. You're not going to aim in that direction at all. So either you're going to be patient if you miss this move and you're going to wait. That liquidity is still offered to you. And look, it retraces for a little bit, dips into that fair value gap again. Second go. If you feel like you missed it, don't. I'm not saying just this fair value gap you're going to focus on. There's going to be something else in here that you feel comfortable with to take a trade, whether it's order block, fair value gap, liquidity void, go back levels, time. But the whole point is you're organizing the data from left to right based on time and function. London makes the high of the day. When we pop down, now I can either expect this to be a sweep sometimes because New York can do that. It can turtle London, session turtle, no problem. But if it doesn't, I want to verify this by time. This is what I mean. Notice how this right here is our about 8 o'clock right there. So I'm just using, I can see it visually. 9, 10, you know. Once you get to about 10-ish o'clock, if price at around 10-ish o'clock, definitely towards 11, has problems getting back above here, yeah, you need to keep trading downside. Or you need to find a door or something that leads you to trading downside. It's not going to work in general that this is going to randomly take out the high of the day. It's not going to do it. And again, look at your market context. All of the liquidity is being taken out on the downside first, leaving the highs for what? For later. So when you see how price makes a Monday high, we understand we keep talking about accumulation above and below it. Just because it takes a few days to get over there doesn't mean that you're going to ignore that and that you're just going to trade sell side the entire week or you're stuck on one bias. And I don't want you to think that when you're trading, it's not about being right or wrong fully about the bias. Yes, you can be wrong. If you simply try to buy this, I would say, yes, you're wrong if this came down. But what I'm saying is, it's not super black and white to where you can come in and say, you know what? Damn, it sucks. I see how, we were bearish here. So I kept trying to sell all this. What I mean, right? How often do people look at all this and think that, okay, well, we're stuck on the sell side? Another move here, and they feel like they missed it. So when all this gives them another chance, again, support and resistance traders get demolished in here because they think that resistance points. No. This is just old liquidity to be taken later. If it's not going to take this here on this PM session or this Tuesday or even the Wednesday, but you get a Wednesday low of the week, taking out the buy side or sell side liquidity, this is your cue to start looking like, hold on, bro. I don't know if I can trade this down anymore. The liquidity here has been offered to you and taken. What left? And again, you can look last week, but really think about this. There's no liquidity down there. There's nothing left. So when you get into another kill zone, look what time it is. I keep saying it. London could be low or high of the day. And what does your optimal trade entry do during your 8 to 11, which is simply your New York kill zone? No, I don't need all the retracement levels. I don't need 70 point whatever. You can do it based on time. It's easy when you learn it like that, right? Retracement levels, you might pull out the fib. You can do that. But if you just literally look and see where liquidity is resting wide open and you're using time to verify these things, Asia never survives. You're going to look at that as a DOL when you're down here at London or when you're looking at this in New York at 8, 9, 10 o'clock in the morning. You reach that by PM session, no problem. And you're done. Look, it just consolidates rest of the day. That's your DOL. Is it going to hit these ones up here? Yes. And you can wait for it. These are still wide open in the week, right? Monday barely survives. Asia never survives. Look at it, both sides. And so today, right? We run those highs on Monday. Optimal trade entry at the top. And you get a nice retracement back down, right? Liquidity's been taken. It's permitted to then make another sell side move. Do you see what I mean? Do you see what I mean? And the whole point is, right, before I look at, I love to do these types of reviews because I'm getting you comfortable with how the market is moving left to right. Understand functionality, liquidity, when you're going to expect a turtle or not. But we're focused on these kill zones and their functions. Optimal trade entry is just nothing but a time-based retracement. Here, we go up, 8 o'clock starts, retracement. It doesn't have to be a full reversal. It doesn't have to take this low. It just has to retrace. Now by 8, 9, 10 o'clock, you know what's open in liquidity. This is already taken by this price swing. This is now not another downside target. This is now in place. Low of the week. So when you see this here, pops in, your Asia session is wide open. Aim for it. Clear fair value gap. Ignore this only because we're bullish. When we're bullish, we're going to respect bullish PD arrays. When we're sell side, we respect sell side PD arrays. This is how a lot of people just get frustrated in the marketplace because no, the market is not doing anything differently than what you expect on paper. It is how you're going about your perspective of what you're looking at this for. Not every price swing is for profits. You have to understand functionality, time. Things need to happen at a certain time. If you need to verify direction for the entire day, go look at London. See what's wide open. Go look at London. See what's wide open. Go look at Monday and see what's wide open. All your abundant areas of liquidity on the week. I didn't even need last week at all. You feel what I'm saying? And look, we can come in, we could do, fun stuff real quick. Let me just check the time real quick. Okay. So now watch. If we really wanted I talked about the wireframe, right? Meaning I want to go to a higher PO3 number and figure out what number is good that I need to interact with. Now I'm gonna give you a hint here. With gold, you actually have the advantage. It doesn't move through a huge ass PO3 number for even a couple days, to be honest. This is a 27 power of 3 dealing range. It's not very big. 27 pips, 27 ticks, $27 in stocks is a lot, but when we're talking about like gold, look how long it takes to get through one of these things. And NASDAQ is smacking 243s and 729s like water. You feel what I'm saying? Look at this. What did we just talk about? This is a reversal point, right? So us looking at this 27, I told you before about how this works. Let's go through it again really quick. What's offered to you here? We already talked about liquidity from it being Monday. But what did I say about if you're viewing a dealing range, you have a certain intent for it. And it's not form fitted. That's what we love the most about it. So I can go and view this dealing range, however price is, wherever the fuck is generating in this area. If it's printing here, it doesn't matter. I can see this high EQ and the low. and what range or dealing range I need to interact with price. You sell from a premium, you buy at a discount. Damn, Jay. It can't be that simple. Well, you know, it's all about perspective. And what I want to show you, right? Watch. What is this? If you need to, go back and watch 2 videos ago. Power of 3, liquidity, right? So that means the failure to touch, when we came up here, the failure to touch this high level creates liquidity above that. And again, look at the Sunday open. It's still there. It's still part of it. The failure to touch this low, power of 3, liquidity. This is the real liquidity in the marketplace that you need to focus on. These are the most abundant areas. It's going to be energetic to fill in these ranges. Okay. So that's why when you see it again here, 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 we smash this go back level, right? We only come down here again to turtle this, how we talked about. But all this is just nothing what we call a, my bad, I'm trying to like the blunt. Um, Stop run of previous dealing range. Stop run of the previous dealing range. And all of this, look, failure to take this EQ here, liquidity. Failure to hit this high level. And all of your A, M, D for distribution, right? This is nothing but a big puzzle. You need to get good at putting the puzzles together. Look at this. Where do you participate from, Jay? If you're so smart. I told you, fair value gap. Where's your fair value gap? It's going to be associated with my blue level here. Look at this. The low is what we're pointed at here. We're reacting off the DR low. This is the low. This is the low of the dealing range. You want to be there. When price has trouble breaking that dealing range again, it's not going to come back down here. You also understand that London is the low of the day. Crazy puzzle piece. Now watch this. You're in a discount. Another puzzle piece. Imbalances are found in your fair value gap. And then you have your Louis Vuitton level, right? You guys are a part of my mentorship now if you're watching this, so you guys can learn my inside jokes. So we have the Louis Vuitton, we have the fair value gap. Now this fair value gap gets rebalanced here. Use fucking fair value gap. But the candle itself, and you need to understand me when I'm saying this. Like I said before, this is fine that the fair value gap candle was interacting or going through the fair value gap level. That's also fine. It doesn't need to be constricted to that. It could be a larger candle or go through the liquidity void and rebalance it. That's another part of your puzzle piece. Your PD arrays will link together like puzzles. Now, you're also, again, like I said, you're in a Louis Vuitton, a liquidity void, LV. It's going to make the structure. Long, insane candle. The moment it gets there, rips this thing. This is like the biggest candle in this whole area, coming from liquidity void. And you know it's a bullish one because you're in a discount. You need to be buying shit. So when you get a rebalance here, you already know it's not just going to cause one big candle. You have the rest of this partition to fill because it didn't fill it the last time. It filled the low. It needs to fill the high now. So you're still bullish until you get here or to the EXT level, how we talked about. You feel me? That's why this is incredible. And you could come in. Like I said, gold does not like to go through like huge as shit PO3 numbers. So the same way I can come on here and like, drill this back down. If 9 times 3 is 27, it's going to give me the same low. And look at that. This is now where another low of a dealing range. So your 9 had a low down here. That's why it's important to understand the marketplace being fractal. We're not just going to stick to the 27 because it's smaller, or I mean the 9 because it's smaller. We're going to go in between the 9, the 27, and occasionally check the 81 to see how far we really need to go. But this is going to help you keep on track for these types of narratives. You can trade any price swing if you understand what the price is doing, where it needs to go. What levels need to get filled in? Where's liquidity at? When can you expect it there? A, M, D. So if this is accumulated, the manipulation down, distribution up makes sense. So if you wanted to go for buys, then wait. Wait for when you have a real chance to do that. Maybe you wanted it here, it didn't work, try again. But early in the week, you need to understand that this is a manipulation down and it's going to fill in a 27 PO3 or a 9 PO3 before it makes another run back up. Incredible lecture, if I do say so myself. So we'll talk more about this when we talk on some stock market um, charts. So we'll look at SPY, we'll look at NVIDIA, we'll look at AMD. But same logic applies here with gold. And again, we'll talk more on Stockholm time or Euro time or time in general. Join the Discord. Talk to you guys later.